to today's session of Indonesia Property Market Update for the first half of 2021 for the Occupiers session. Before we start our webinar, we have a few information in regard to our webinar today. The first one is that the audio and video for webinar participants are being disabled to avoid noises, and we will only enable audio and video for panelists. This webinar is being recorded, and we will share the recorded files and presentation slides tomorrow morning to your email inbox. We will have a questions and answers session at the end of the webinar. Please feel free to type your question in the questions box below. And we may have a limited time to answer to your questions, but we will send all unanswered questions and answered by our experts to your email inbox. If you need any help with the webinar, please do not hesitate to type your questions in the chat box. Our webinar host will help you. And along with the recorded version tomorrow, we will also send a survey link for you to fill. We appreciate your time to fill out our survey to make sure that we can improve our webinar in the future. So without further ado, I would like to introduce you to today's presenter. The first one will be our keynote speech will be brought by our Managing Director, Pak Mike Broomell. We also have our Head of Research, Bapak Ferry Salanto, our Head of Office Services, Bapak Bagus Adikusumo, our Head of Industrial and Logistic Services, Bapak Rivan Munansa, our Head of Residential Services, Ibu Lenny van Es-sinaga, and our Head of Retail Services, Bapak Sender Halsema. So without further ado, please welcome Managing Director for Colliers Indonesia, Bapak Mike Broomell. Pak Mike, the floor is yours.
Thank you, Auntie. I'd like to welcome everyone that joined the seminar. I see a number of familiar names looking at the list of people that signed up, so I wish I could say hello to everybody in person, but I can't do that with so many people joining. Today, our team of experts will be presenting you with our observations about the current property market situation. As I'm sure you realize, as property occupiers, opportunities in the property market vary greatly according to the asset class or the sector. So I will begin with a brief overview of the different asset classes, and then our experts will cover these sectors in more detail. We note that the Indonesian government's recent PPKM measure extension on Sunday was providing another week of agony for many retailers and another week of uncertainty for office tenants about their space needs. So it's as a result of these uncertainties and difficulties, it is a very good time for occupiers to negotiate attractive rental packages. The healthier asset class or sector in the market are industrial and logistics and data centers. And even though those are healthier, there still are a number of opportunities to get attractive purchases on land or leasing deals, because developers are looking to generate cash in the middle of the pandemic. Aside from the single family housing in the suburbs, the residential sector is also struggling, and the price of strata title apartments as well as rental rates for apartments and expatriate housing are highly negotiable. The Indonesian government, of course, as you're aware, has signaled the number of vaccines that they plan to distribute later this year and also next year. And if the vaccine distribution goes as planned, we do hope to see signs of an economic recovery by year end. Of course, we had a false start a few weeks ago. I thought things were getting better, but it looks like the recovery will be delayed. Even though so there is still light at the end of the tunnel, even though we are going through a dark tunnel right now. And it's a good time for occupiers, if they can anticipate their property needs, either to enter into an attractive long-term lease or to purchase properties if they have the cash to do so. So on that note, I would like to conclude my talk with the hope that you do enjoy today's webinar and you receive helpful insights from the presentations of my colleagues. So please do feel free to reach out to me or my colleagues when you, after the seminar or during the seminar today via the chat room. Thank you.
Thank you, Pak Mike, for the speech. So we're going straight to our first sector, which will be office market. Our head of research, Bapak Ferry Salanto, will present about what happened in the office market on the first half of 2021, as well as a little bit about the forecast for the remainder of 2021. And followed by Pak Bagus Adikusumo, who will explain his findings and what are the strategies that occupiers should have on the remainder of the 2021. Pak Ferry and Pak Bagus, the floor is yours.
Thank you, Auntie, for giving me the time. Good afternoon, all. Now it's time to update what's going on the office sector. If you are office occupiers, you are now enjoying a time known as tenants market, when this is a situation when market favors tenants. One of the reasons, because of the oversupply situation in the office industry, has already happened even prior to the pandemic. The pandemic has indeed worsened the situation to all property sector, including office sector. But going forward, supply growth will likely to be steady and relatively low. Even if you look at the right-hand chart there, which is the annual supply projection, the average further future stock for the CBD is only below 150,000 square meter. In the normal time, the annual average could reach about 200 to 400,000 square meter. In the outside of CBD, supply will grow at below 100,000 square meter, which is also quite low compared to the previous years. As you can see from the chart, we still expect that projects in the pipeline are already scheduled for completion in 2022. Therefore, next year should remain a challenging year for office developer, but perhaps not for occupiers. From 2023 onward, supply projection will taper off, including in 2024, where there will be no new office project being available in the CBD area. This will regulate the balance between supply and demand in the future. Next slide, please. Okay, as you can see from the left chart, since 2016, occupancy has been in the downward trend. Developer enjoy at the position of 12 o'clock. If you see if you can imagine the clock cycle, 2000, 2012, 2013 period is basically the 12 o'clock position for most of the developer. This also suggests that the recent pandemic situation was not only the cause of the slowdown in the office market. For the first time, because of the oversupply situation, office occupancy was in the historic low. Now is below 80%, as you can see from the figures in the chart. We see tenants tends to opt to take efficiency measure with space reduction, mainly because right now many companies see that work from home policy is quite effective to be implemented, concerning that many companies have also been adjusted with this new policy arrangement. In the meantime, the asking rental tariff in the right chart indicates that that market is very conducive for tenants. We have seen rental correction and more significant correction or discount in the transaction level, depending on the space that tenant is taking, and of course, depending on the brand of the tenant. To conclude the office sector, from tenants' perspective, this year, we remain a tenants market situation. Office market needs economic growth to accelerate its growth. which we don't expect to see this year. This year will be quite low because our GDP projection for 2021 is lower than 4%, which is not enough to lift the overall office market. That's all from me, Auntie.
Thank you, Pak Ferry. So we will continue with Pak Bagus updates on the market. Pak Bagus, over to you.
Thank you, Auntie. Thank you, Pak Ferry. Thank you, everyone, for joining our webinar this afternoon, for sharing the fact of the first half of 2021. As mentioned by Pak Ferry, that the market currently continues to be oversupplied. Rent and occupancy rate continues to be pushed down. We are going to face below 80% occupancy rate towards the end of 2021. We forecast that it's going to go even further down at the end of 2022. Although supply that Pak Ferry has mentioned before is delayed because of the pandemic condition, it is not easy to construct the building nowadays. From our recent leasing transaction, the rent in general has come down from 20 to 45% from the asking rent. As market oversupply, and then now it is actually a good time for the tenants. Market continues to be the tenants market. So if you are occupiers, which is right now you are present, it is a good time to achieve a good rent for either relocation or renewal. As property business in general is strongly correlated with the GDP growth. So yes, as Pak Ferry mentioned, our GDP in 2020 is -2%, 2021 forecasted slightly below 4%. It's still not good enough, to improve the demand, but at least the GDP growth is showing an increased trend. So we're hoping to see the GDP growth increasing the rate into higher than 4%, so that we hope to see demand for office spaces also will be growing. If that's not happening, it's still going to be very challenging. Major occupiers will still be continuing the same technology-related industry. So a company like e-commerce, financial technology, consumer products, logistic business, and also to some extent is telecommunication-related industry are continuing to be the main occupiers in the market right now. Next slide, please. Now, going into the strata title market, what is different from our last webinar, second half of 2020, there is not much transaction. First half 2021, we start seeing owner of strata title space sell the space at a market price. So what I mean by the market price right now is actually being pushed down, the same as rental. So we see in the market, the strata title price has come down from 18 to 33% compared to the pre-COVID price. But generally speaking, the owner of strata title space still keep the same belief that they would rather rent and lease the space at a very good attractive rent other than selling it at a very big discount. The reason being that is because if you own 1 or 2 floor of space of strata title sitting empty and vacant, the amount of the service charge that you need to pay is not small. So after a while, strata title owners feel that they should rent it, and then the market is currently like this, challenging, so they rent it and offer a very good and attractive rent in order to optimize the asset, but also at the same time, having the tenants pay the service charge so they don't have to pay the service charge by themselves. Next slide, please. Now, work from home policy. Yes, after slightly over 15 months working from home, so we see more and more companies when they have their lease to be renewed or lease to be restructured, more and more companies actually decided to reduce their space from 15 to 40%. This is understandable because they cannot keep the same amount of space. It is not efficient. You're still paying the same, you're paying the rent on the space that they don't really use. But the impact is that this space reduction will be added to the market that is already oversupply right now. So it is more challenging and also longer for the office market to recover. And then this is even more, makes more challenging for the landlord to fill up the space. Now, when is the working from home will end? It's hard to say, but many companies start seeing and witnessing that they are going to apply this working from home policy either permanently or at least for the future. So 50% hybrid business model, 50% working from home, and also 50% working from the office. And then also the impact of working from home and working from the office 50-50, the companies start to change the current layout. So it'll be more and more hot desking, mobile desk instead of fixed desk. It'll be more and more open area compared to closed offices. So flexibility and collaboration is actually offered in the current layout so that people can still work together collaboratively. And then generally speaking about renew or relocate, I have to say a lot of companies consider moving is a high risk for the business, understandable because of the uncertainty globally about the economy and this pandemic. We don't know when it's going to end, but we start actually seeing the first half of 2021 and more companies to decide to relocate to a new building and taking advantage of the current situation. Because I guess they have been also working for more than 15 months from home and adjusted running the business on this current pandemic condition. Next. Now, vaccine is the key to the problem right now. We need to get as many people vaccinated as quickly as possible. If you join the first webinar that we have yesterday, we had a source from Bahana where actually supply of vaccine, the country will have about 486 million by first half of 2022. So we can say that supply is actually not a big issue, more on the speed and the delivery of this vaccine itself, because we have to be able to work together, government, businesses, and ourselves to achieve the herd immunity as soon as possible. And then right now, people have already been working from home for more than 15 months. They pretty much adjusted, right? As Pa Ferry mentioned, get used to it and running the business on the pandemic condition. So if herd immunity achieved, we already adjusted working from home. So we hope to see that the economy will go back to normal. And then we hope to see the GDP growth in 2022 much higher, and in 2023 much higher. So as the GDP growing is good, demand for office space is also going to be added. So at the end, we would like to see over the years, demand will catch up with the supply and the office market will come back to where it was when we have a good and performance of office market back in 2001 up to 2014, 2011 up to 2014. Next slide, please. And then this is the strategies. If you're occupiers right now, yes, it is an opportunity to consider relocate, especially if your company have adjusted to running the business the last 15 months working from home, and then with this COVID-19 condition. And then you could have the opportunity also to lock in a very competitive rent for a long period, 5 to 10 years. And also, as I mentioned early on, that it is not only the companies which are resilient to the pandemic that decided to move, but also we see companies that have been in the same building for many years, fit out already fully amortized. They consider moving and then trying to get a very competitive commercial package. And then office market continues to be tenants market. Occupiers have the opportunity to discuss with their landlord about the lease renewal early, and also possible restructure the lease. What I mean by this is that we start seeing a landlord supportive the idea of tenants to extend the lease early. let's say you have at least 1 or 1.5 years to go, and you could have an open discussion with the landlord and trying to achieve a win-win solution. Some landlord compromise to that, because when you sign a lease 3 to 5 years ago, the rent is probably this, good and reflect the market rent at the time. But right now the rent has been corrected down, as I can see in the first slide, 20 to 45%. So some tenants having their businesses impacted so much by the pandemic and then trying to negotiate the deal with the landlord. Some landlords supported the idea, some landlords don't. Now for the long term also is for the end users, if you are occupiers that has been leasing the space for a long time, it is also an opportunity for you to buy a building. Income producing buildings where there is still empty of the space, and when you can rent and also at the same time getting rental income for the company. Or you could buy a big portion of the strata title building at a discounted price. That will wrap up our presentation today. Thank you for listening. I'll turn the offer back to Auntie.
Thank you, Pak Bagus, for the overview of office market. We're going to move to the next sector, which is residential market. Our head of research, Bapak Ferry Salanto, will still be the one who present about the residential market updates. And also Ibu Lenny van Es-sinaga will then present about his findings on what happened in the market on the first half 2021. Pak Ferry and Mbak Lenny, over to you.
Thanks again, Auntie. Okay, now we are talking about the residential market. In this section, we will cover high-rise residential and a little bit about landed housing, but specifically for expatriate target. So the characteristic of high-rise and landed houses market is somewhat different depending on what segment market that we are talking about. On the apartment or high-rise segment, we see supply has been quite stagnant. If you look at the chart there, there are some numbers there. That's basically the annual supply for each of the year. Developer confidence, if you look at the number there, over the market has declined, highlighted by the reduction in supply in the market during the pandemic period, which is 2020 and 2021. While in the meantime, the overall expat housing market has yet to show improvement, clearly because number of expatriates coming to Indonesia is very limited in the recent time, with so many requirements from the immigration office. But Indonesia should target a speedy process in curbing the pandemic before seeing economy to recover, which will be needed for buyer to make sales, to create sales again, and company to come back with more expatriates working in Indonesia. Next slide, please. Okay, we have some chart here. This chart picturizes the overall performance of apartment market. The above left chart shows the annual absorption of apartment units, which is in the downward trend since 2016. This suggests that high-rise residential market was already tough even before the pandemic. You can see also until the first semester 2021, we only record less than 30% sales compared to last year. Why this could happen? If you look at the above left chart, it shows occupancy performance, and the below shows rental rate performance. Both charts are not a good picture for investor type of buyer who generally aim at middle to upper class product because it reflects a lower yield expectation. In the meantime, for most end users who are mainly in the middle to lower class product, the concern is buying capability. So it is related to the amount of down payment they have to provide, the current interest rate, and then also their ability to pay monthly installment, because in this during this current time, there are no certainty that they can continue on paying the money installment if the company they are working in is not is also not performing. So in short, this high-rise residential market will remain challenging for developer, but perhaps it will be good opportunity for buyer because they have so many options, and then the chance to get interesting price. That's pretty much it from me. Thank you.
Thank you, Pak Ferry. Lenny will give us explanation about the market updates for apartment market and also expatriate housing. Lenny, the floor is yours.
Thank you, Auntie. Hello, everyone. I hope you are well and staying safe and healthy. I would like to share market updates on the expat housing market. So we have no witnessed any improvements in the market. So the condition is still tenant markets, which is good. Okay, but the problem that's now there's a lot of vacant properties, which is now the owner that we can see that they prefer that to sell the property. So they have two options actually. Before they only for lease, but now that most of the owner prefer to sell and also to lease their property. Next, please. Okay, this slide is about COVID-19 and vaccine. So we'll see that in the market right now, since that last year, so the owner that asking for that 2 years or 3 years lease minimum, but right now we'll see that a lot of that the owner very flexible, so they agree to go down to that the 6 months or less than 1 year. So because that the expatriate that postponed to come to Jakarta, so this is the condition that out of our control, since that the positive case number is increased. So a lot of that in the immigration also that they have the new regulation, and then right now the quarantine time 5 to the 8 days. So this is really a fact that in the expatriate situation. And then the next step about the vaccines, and as you know that like Pak Bagus mentioned about the vaccine still on progress. So really hoping that the process that's going well. So this is gonna be a fact that for the expatriates, for the company that's offices coming here, and then yeah, we really hope that the vaccines that the distribution that going well, and then also we'll see again that the landlord very flexible on that on the price, and then also we'll see that also for the next for the new expatriates, when they're planning that to coming here, they prefer that to do that the virtual meeting and then also virtual survey, because that's a high risk for that the company bring them to here. So it's a fact also that for the HR or some of the multinational company, they really want to see the government that complete this vaccine program, and then they also waiting that how's the economy is going in Indonesia. So what I see that at the moment that HR that's more careful when they will bring that the new expat, and then also they're really careful about their about the contract. I think I mentioned about this one that on the first webinar. So they really like make sure that they don't take the high risk. Okay, in terms of the price, they lower. I mean that the budget that's now that they cut the budget. So, and then also that about the lease terms, you know, so they have to make sure also when they bring that a new expat here, they have the support here. Let's say if they bring with the family, coming with the family, they have to make sure if there's any clinics, if there's happen with their expat, you know, if there's any clinics that can help them, you know, what's the supports here. So Colliers a residential team that we give that to our clients, that a lot of information about the home care package, you know, update about the clinics, and then sort of. So this is that we have for the, if you are that the if you're the occupiers, and then also that the management, and then also the landlord, you have also to think that the about that the expats coming here is not easy, because the situation that's getting worse, you know. So also we see that now that the new SOP from that some of the multinational company that affect in the contracts. Next, please. Okay, the next year about the omnibus law. I haven't seen that the potential buyer, foreign potential buyer that's in the market. I think that they still like want to wait, you know, wait and see, because that even that the price that's really competitive, very good, you know, that most some of the owner that really much lower the price and then selling price. So the foreign buyer, I think that they prefer to wait and see, you know, because this situation of the pandemic and economic in Indonesia. Next slide, please. Okay, what's changing in the market? You know that what we see that in the market right now, in the expat housing market, that for the new expat, the company that prefer that for the new expat that continue that their lease, you know. So they don't want to take a risk. They want to that make sure that the expat, you know, that stay in that safe property. So that's why that the companies that prefer that they stay in the apartment rather than in the landed houses. So I can say not all, but the percentage is very small if they bring that the new expat with the family. So we'll see that the service apartment quite a lot, and also that the favorite, I mean the high demand apartment, that they know that the management very good, and also they follow the protocol, so the health protocol. So I think that's for the landlords, and also that for the companies, that's we have to you know, that see that this for the property, I think that the apartment that is the best right now. Yeah, either that's for the single or the couples coming here, rather than the house. But because what? Because that the house that you have to take care of a lot of things, which is in the apartments, the facilities and security and everything that's already covered in the rental. So I think that's all from me. Back to you, Auntie.
Thank you, Mbak Lenny, for the explanation. We'll move on to our next sector, which is retail market. Again, Bapak Ferry Salanto will explain about the market reports and updates, and followed by Sander Halsema, who will explain his findings and the strategies for the remainder of 2021. Pak Ferry and Sander, over to you.
Thanks again, Auntie. Okay, now we talk about retail sector. When the first people movement limitation, which is the PSBB, was firstly enacted last year, the retail business was hardly impacted. Retail business is not only about high occupancy, but it needs crowd, which will be later translated into transaction. Nowadays, with further PPKM Darurat, things get worse with the limitation in number of visitation and also the operating hour. However, in terms of supply side, the good things about retail sector is that supply growth has been quite moderate. The government of DKI Jakarta had a retail moratorium back in 2012 that was quite effective in curbing the expansion of retail projects. You can see from these charts that supply pipeline has been relatively stable in greater Jakarta and particularly in Jakarta area, meaning that it just need a trigger from the government policy. Once everyone is not afraid of the virus, things get back to normal, retail business will recover. Next slide, please. Okay, over time since 2016, occupancy rate has been adjusted, and especially during pandemic time, we see store closure, which is inevitably, and the impact was not only directly felt by retailers, but also for landlords because their operation is depending on the store or outlet income. Our occupancy is now somewhat low, as you can see from the figure. We see that landlords opt to adjust payment scheme or finding a solution on a win-win basis to help out tenants to go through this tough time. It's time now to talk about your existence in the mall, because landlord will listen to any solution, because this is now a common problem for both landlord and retailers. I think that's pretty much from me, Santi.
Thank you, Pak Ferry. Sander, the floor is yours.
Hello, everybody. Thank you for dialing into this webinar today. The retail market is currently actually in a very similar state as it was a year ago, which of course is not very positive. As a matter of fact, we've been talking to many national and international retailers in Indonesia, and they actually state that the current situation is worse than it was a year ago, because not only the malls are closed at the moment, but also their standalone sites are affected, either closed or they can only use it for takeaway and delivery purposes. And so most retailers actually say that the current situation is worse. As you all know, the Indonesian government has implemented the PPKM restrictions, or community activity restrictions, as they say, in Java and on Bali. And 2 days ago, the PPKM has been extended until August 2. There have been some relaxations of the measures, but here on the left side of the slide, you can see that malls and shopping centers are closed. Yesterday, we got a message that they were actually allowed to open until 5 p.m. at a very low percentage of people that were allowed in, but it doesn't seem to be true. So malls and shopping centers are still closed. Grocery stores and supermarkets can operate daily until 8 p.m. at a 50% capacity. F&B businesses are allowed to open until 8 p.m. and have dine-in for 20 minutes per person. And apart from that, they can do takeaway and delivery services. And like I said earlier, these measures will be in place at least until August 2nd. And we've yet to see if this will be extended or not on the 2nd of August. Now, if you look at the right side of the slide, the expected response from retailers is very similar to what it was a year ago. So now that malls are closed and shopping centers as well, a lot of retailers will request free rent with their landlords. And if things are opening up again and measures are being relaxed a little bit, rent rebates will be requested, because of course we will probably see adjusted opening hours from malls and shopping centers. Retailers will continue to review their portfolio, really looking at the amount of outlets they currently have, looking at the sales of those stores and see which ones they should continue to operate and which ones they should close. Of course, there's many factors that come into play to decide whether to stay open or close an outlet, but they will continue to do that. And of course, retailers will expand less aggressively as they did pre-pandemic. And then retailers, of course, need to get time to get back on their feet, restabilize their financial situation. And so we will also see delays in fit out or handovers requested by a lot of retailers, whether it's in a new store in a mall or whether it's a standalone site. we expect a lot of delays in terms of opening and fit out of new outlets. Next slide, please. So what will retailers do on the short term? This is something that we see in the whole region of Southeast Asia. We will see continue an increase in demand of turnover rent or revenue share, as they call it. It could either be with a low base rent and the rest a revenue share percentage, or a full revenue share program. A lot of landlords actually in Indonesia are not quite used to this yet and will not offer this to the retailers, but we expect as more and more retailers will request for this type of rent structure, that eventually going forward, they might give in and allow retailers to have this kind of structure in their malls or standalone outlets. Retailers will continue to look to open standalone stores near residential areas. That's a phenomenon we saw starting early last year when the pandemic started. This is in all segments of the retail, so it's F&B, it's also electronics, it's fashion retailers. They really want to open closer to residential area, as a lot of consumers might not feel comfortable to go into a mall with a lot of other people. And so they still need their basic needs, and so prefer to go into single stores, standalone outlets instead, and so closer to their homes as well. And so we see a lot of retailers still looking at standalone. Like I said, mentioned earlier, we see a delay in handover and fit out of new stores, both in new mall projects, but also in standalone sites. And then, of course, retailers will continue to invest in their omnichannel strategies. You can imagine, because of this pandemic and people staying at home, the online sales in Indonesia grew very fast. And we think a lot of consumer for basic items will continue to do so, purchase online. And so retailers that didn't have that already are still investing in their direct channel, but also in cooperations with the likes of Tokopedia, Shopee, Gojek, and Grab. Next slide, please. Now, for landlords, of course, this situation is also very painful, as you can imagine. It's very important for landlords to maintain, in shopping malls, to maintain a strong tenancy mix. And so flexibility in terms of rent and service charge is required. Like I said earlier, retailers will ask for rent-free periods when the malls are closed. And when they open up, if the opening hours are adjusted, they will ask for rent rebates most likely. And so flexibility is required by landlords, even though it's painful because it's their main income source, of course, in order to maintain a strong tenancy mix and the retailers to stay in that particular mall. It's also an opportunity for landlords. There might be retailers and tenants in the mall that are not performing so well. So maybe together you can come to a conclusion that it's better for a certain retailer to close shop. So you can use this pandemic to have a look and see if you can do such thing. It's important for landlords in the short term, we think, for existing assets to try to create more outdoor space, because consumers feel more comfortable to stay outside and hang out there with their friends instead of in an indoors environment. And then, of course, landlords should improve the infrastructure of online order fulfillment. That means that they should try to make it easier for Gojek and Grab drivers to pick up items that are purchased online at the retailers in the mall, making sure that they don't have to pay for the parking, stuff like that, in order to help the retailers. It's easier to fulfill their orders when they have an outlet in the mall. Next slide, please. On the mid-long term, of course, when malls are allowed to open again, they should make sure that they maintain strict health and COVID protocols to ensure the safety of their visitors in the malls. Landlords could help retailers with technology. They could create an app, for example, to create an additional sales channel for mall visitors to become a member of that application and help retailers to sell through that application. And then for new mall developments as well, try to create as much outdoor space or semi-outdoor space as possible so that people can hang outside where they feel more comfortable. And we really saw a change in behavior in Indonesia, where initially, of course, Indonesian shoppers like to stay inside in an air-conditioned environment. Now they feel more comfortable to stay outside. Next slide, please. And then as a final slide, what can retailers do going forward in the remainder of this year? We see a lot of retailers are looking for cheaper ways to expand in areas they don't have outlets yet. F&B retailers could go into cloud kitchens. It's much cheaper in terms of rent, of course, but also in terms of fit out, and they can sell online through Grab and Gojek. Other type of retail segments could go and open kiosks and smaller stores to test out an area and use that as small online fulfillment centers and see if that area works for them, and then later on open a larger store. So the next point is actually very similar. So a lot of retailers are looking to open smaller stores, less square meters if their concept allows them to. They can save money in fit out, they can save money in rent. And with the new omnibus law, foreign retailers are also allowed to open smaller outlets. Sizes differ per segment, whether they're in fashion or in grocery or F&B, but it's a positive thing, I think, so they can still expand at lower costs. Also mentioned already, open closer to residential areas. We see changes in store design to make sure that these stores can also integrate on and offline sales. So designated areas, for example, for Gojek drivers or Grab drivers to pick up items. And then retailers could use their existing network of outlets more efficiently. Large F&B retailers, for example, that have a lot of stores, they could use that outlet to serve as an online fulfillment center as well. So that's what we think retailers could do going forward the remainder of the year. This is the end of my presentation. If you have any questions, please reach out to me. Thank you.
Thank you, Sander.
Yeah.
You are still on mute, Auntie.
Sorry, everyone. We're moving to our last sector for today. It will be industrial and logistics market. Pak Ferry will still be with us to explain about what happened in industrial and logistics sector on the first half of 2021, followed by Pak Rivan Munansa as our head of industrial. What happened in the market, as well as his view for the remainder of 2021. Pak Ferry and Pak Rivan, the floor is yours.
Okay, thanks again, Auntie. Hello, everyone. Now come to the final sector, which is the industrial sector. From the last yesterday's seminar, we at Colliers agrees that the industrial market will be the first sector to recover compared to the other sector. So we have some confidence on this, but you might not see it is reflected in the annual chart on the left, where sales has not been reaching 50% of the total sales of last year. But we believe that inquiries and interest in industrial product like land and building are still there. So that means we see potential pent-up demand in the future. In terms of supply, industrial buyer would see a great amount of choices, particularly because right now we see some developers are planning to expand in Serang area in the west, further south from Bogor to Sukabumi area, and then Karawang. Of course, we still see some potential land to be developed as well. And then the location where Patimbang Port is now, which is Subang, we see that potential developers are planning to have industrial estate location in that area. Next slide, please. Okay, we have two charts here about the price and active industrial sector that absorb land and industrial building. From the price update, we see some developer has set new price, particularly for those with limited land stock and continuing land absorption. So that you can see the increase in price in some area, although we know that this current condition is not really supporting for price increase. However, on the other side, there was also a price adjustment in Serang area because they are now trying to accelerate their sales by providing a more attractive prices, especially for new industrialists. And for several years, automotive sector has supported the industrial market as the main buyer, as the main drivers. Until now, we see this sector is still expanding. Perhaps going forward, the industry is becoming more sophisticated with updated technology. And we know that one overseas automobile company is having their presence here to develop their high-tech electric vehicle. More technology-based company will invigorate the market, including data center, as you can see from the chart there. That will be continued to expand in Indonesia. And we are expecting to see more transaction, especially in the second half of this year. Apart from that, the growing e-commerce industry will create more demand for logistics and distribution center as well. So we also see the growing needs for cold storage. And of course, traditional sector like food, chemical-based product, FMCG, medical and healthcare, and so on will continue to underpin this industry. That's pretty much it for me. Thank you, Auntie.
Pak Ferry. Thank you, Pak Rivan. Over to you.
Okay. Thank you very much, Ferry, for the industrial market outlook of second quarter 2021. And thanks everyone for joining this webinar session. Regardless the current pandemic situation, I believe industrial is still better compared to the other asset classes. So here the update, the industrial market updates that we see in the market. For new investment, currently the market is still flat, and we think likely will continue to be flat toward the end of the year. This is due to the limitation of people to travel across the region. And the other one we see as well, data center requirement still quite active in the market, even though the percentage of real closing transaction is a bit low, because at the end of the day, it will depend on the end user. And then we have seen existing FMCG is still expanding in the market, regardless the pandemic. And somehow we see not much effect on the overall market demand. And as Ferry said, that we also see that continuous requirement on e-commerce and warehouse requirement. During the pandemic, we see there is a continued increase on the number of e-commerce customer as people prefer to shop through online. And then for distribution purposes, logistic companies also needs to store their goods. And then related to PPKM, for essential and critical sectors, production actually does have much effect because they can still continue. But still interruption occurs for other departments such as operation and back office, so they cannot fully operate. And then for essential and critical sectors, they are affected due to the temporary interruption of the, it's going to result on the interruption on their production. But we believe the situation will not long last, because if it's this PPKM long last, then will impact the whole economy. Hopefully things will get back to normal after the PPKM. But then occupiers also need to prepare, other strategies if this PPKM is taking longer than what we predicted. As everyone cannot, predict what's going to happen. Okay, next. So what should we do during the pandemic and the ongoing vaccine program? internally, occupiers should develop an achievable, business plan. This is due to the fact that there is always business interruption as a result of this pandemic. So business plan is also should be realistic. Occupiers also should try to operate efficiently. Basic one, minimizing cost and maximizing profit. Company efficiency is also the key in order to survive. But on the other hand, occupiers actually can look for a better rate and location because during the pandemic, this is probably a good opportunity. And then in case we get an attractive terms and condition, occupiers should try to secure for a long-term lease. Yeah. Okay, next. So what is changed in the market? We see a tightening access to the industrial areas. Several toll gates are closed right now, and road closure, which is before, is not happening. And there's a restriction also on the movement and a significant impact, especially for the non-essential and non-critical sector. However, since the market condition is flat, then right now it's changed in the market that more attractive option will be available in the market. Landlord or property owner is flexible in terms of the rent and the land price because they want to keep the tenant and attract potential buyer. Next. So what is the strategy for the second half of 2021? We believe that occupiers should try to find other possible business alternative. For example, we have seen, for example, like a garment company, they switch their product from producing apparel to basically produce mask, or even other, personal care factory that they are more, they increase their product in, switch to hand sanitizer, related to the pandemic. I think this should be also important to see for the opportunity. And the last one is we hope that the company also, the last resort is to do a company efficiency if this happen for a long period of time. But it will be good, if they can, they are able to close anything that non-core business or non-product lines, just to be able to be efficient, and then also reduce the expenses, the overall expenses of the factory. But on the other hand, we also see a good opportunity actually in the market, which is never happened before, that under current condition, we actually should be able to identify property at good and prime location. And the last one is also we have seen that also developer will start giving a very attractive lease or even a sale price, because as you know, the demand is quite low for purchasing the land. So a lot of landlord will actually willing to drop the price in order to get the potential buyer. So I think that is all from me, and thank you. I'll give it back to Andy.
Thank you, Pak Rivan, for the presentation. So the industrial and logistics market will wrap up our presentation for today, but we're moving forward to questions and answers. We have a few questions and answers already in our chat box. I will categorize all the questions into each sector, so it won't go back and forth to different person. But in the meantime, if you need to have further discussions or if you need to subscribe to our market report, we have a quarterly market reports and market insights each month. You can just scan through our QR codes in your on your screen, and then save our experts number and contact them directly, or access our reports through the QR codes. So we're going to start with the office market category, Pak Bagus. The first question came from Bapak Fauzi Pinem from Tokyo-Land, Indonesia. So apparently, I think we still have a few of landlords and developers on our webinar today. Pak Fauzi asked Pak Bagus, he has a question. What are the office business opportunities in the future, considering the work from home systems, and seeing that many companies seems to be comfortable with the system of working from home? I think you kind of touch base with this specific topic, but maybe you can elaborate more, Pak Bagus.
Yeah, thank you for the question, Pak Fauzi. Working from home is something that in general people are not used to. We are all here forced to do it. We have no choice because of the pandemic. So generally speaking, we see people actually would love to interact, right? We are the people of social interaction. So working from home, even though we seems that people are comfortable, actually people would prefer to come and work in the office. But this is the choice that are given in the market. So that's the question, the statement, the answer to your question. And the second one to add is, so this is temporary things that is happening in the market right now. Because our country currently having this problem, and the problem is not yet solved with the pandemic. So we hope to see the GDP growth is growing, and then we hope to see it's going to be more and more increasing, because only with the GDP growth we will only be able to create the demand for office space. Yes, it is oversupply. Yes, all this building along Sudirman and Tamrin are having a difficult time right now, but once the pandemic is solved and economy is recovered and back to normal again, I believe it's gonna go back up to the position where it was in 2011 and 2014. So yes, it is challenging right now, but we believe at the end people still would like to see and then meet their colleagues, their friends, their departments to strategize and improve the business overall.
Thank you, Pak Bagus. So moving to our second question, still for office sector, it's from Ibu Putu Sinta Andriana Putri. Ibu Sinta asked, in this situation, it's still from landlord's point of view, Pak Bagus. In this situation, until the end of 2029, what can office landlords do, Pak Bagus?
Until the end of
2021.
2029. Okay.
2021, Pak, sorry.
Well, as the current market oversupply and rents and occupancy is down, so landlords right now is advisable to show flexibility and accommodation to the tenants' needs. For me, saying that, meaning that if you own an office building and you run office building, and right now there are many office building available in the market, and so many options that tenant can choose from. So right now, flexibility that you need to provide is not only competitive rent, but also any other incentives that currently I see in the market in the transaction is like rent-free period. We see some option to surrender. We see some portion, not option to render the whole thing, option to portion of the option to surrender, some free parking, so some signage right, because if you are a major occupier, so all those terms and conditions that could be added and become incentive in order for your building to be chosen by the occupiers is recommended right now. And then you need to achieve your occupancy as high as possible, maybe to 70 to 75%, because we believe by achieving those as soon as possible, your cost of operating the building is fully covered by the tenant itself by having the occupancy of 70 to 75%. So flexibility and accommodative to the tenant's need, because it is right now is a tough market for the landlord. But again, we hope it'll come back once the pandemic is over and then GDP growth is start to catch up. Demand for office space is also growing.
Okay, Pak Bagus, thank you. The next question came from Bapak Indro Cahyono. So one of the issue during and post-pandemic is digital transformation. How the landlord strategy for accommodate occupier needed, especially in office and retail sector. We'll go to office sector first, and then I'll go to retail afterwards, Pak.
Yes, at the beginning it was a disruption. March 2020, I remember all the landlords are not ready. But now the landlord pretty much is ready and then have their own virtual section of the office visit. So you could visit the office from other part of the world, and then can see the look of the office, the entrance, the lobby, the typical floor. So that's are going to be done virtually, yes, and not only that, the building automation system and also all this thing will be the maintenance of the building operation now is already done digitally and automatic, so people in general, occupiers, could have access with certain password to see the performance of the building, and also the ability to see what's if there is problem, the connection, the complaint process, the complaint process to the building owner will be faster. But the most important thing is site visit, because before you decide which building you're gonna go to, before it was tough, but now every landlord is well equipped with the virtual site visit.
Thank you, Pak Bagus. One last question. This is from Pak Anung from Bank BTPN, Pak Bagus. What is the best option for tenant between releasing space or renegotiate the rate at this moment? Is there any possibility to do renegotiation, Pak Bagus?
It's a tough time for both tenants and landlords right now. Some landlords do support, as I mentioned early on in the presentation, understanding the tenant situation. Yes, every tenant nowadays have the space that is too big, and they are yet forced by the current situation, because business is not doing well, to cut expense and do efficiency. So one of the expense that they could cut is the occupancy cost. So between the two, space reduction or renegotiating of the rent, probably landlord would prefer nowadays to accept the renegotiation of the rent in exchange of being able to extend the lease. So meaning that it's win-win, right? It's win-win compromise. Tenants have a tough time because the space is too big. and then trying to reduce the space. Probably landlord are not possible to do it because they have their own internal situation as well. But in general, the way I see it is combination of the two is possible, but landlord in general I see is more open to renegotiate on the current rental rate. Of course, you have to give something in return by extending the lease further to another 3 years or something, you know, to make up for the loss that landlord is probably getting because you renegotiate the rent, especially if you also reduce the space. So I mean, it's again has to be compromise, win-win solution, because each tenant and landlord have those situations. But I believe as a property consultant, being able to find a solution to both parties is the best way to move forward.
Thank you, Pak Bagus, for the answers. We'll move to apartment sectors questions. From Pak Arta Kurnia, I will ask for Pak Ferry's and Pak Mike's help to answer the questions. Pak Mike and Pak Ferry, what do you think of co-living market in Jakarta? Will there be a distraction to the current starter title condominium market, or will they be complementing each other? And is there any case where condominium market enter an office building? Where office markets shift to co-living function. So it will be, you know, Pak Mike and Pak Ferry's opinion, and also probably Pak Bagus later. Pak Mike and Pak Ferry.
Okay,
Pak Mike, you're still on mute, Pak.
Oh, Pak Mike.
Yes, sorry, Pak.
I personally think there's a big demand for co-living. The problem has been the supply, because it's very difficult for a developer to build co-living space and lease it out, which is what you need to do for co-living. You can't sell strata title units because you lose it's like a living organism, and you kind of lose that togetherness when you start selling the building strata title. Interest rates here are high. So as a result of it, it's just very, very difficult for a developer to make any economic sense. And that's what's interesting about your question, because if you have office space, let's say it's an older office building, and somebody can repurpose it so that it becomes a co-living space, potentially, economically, they can make it work. And it may be better than having empty office space. They could actually fill it up. And it might be in a very attractive downtown location where people would love to be able to work downtown, but right now they just can't, they can't find a co-living option. And there could be a lot of programs and whatever the developers can do. So I think that's a very interesting possibility. And in fact, I recently read something, I think it was in the Wall Street Journal or New York Times, and it was talking about that very thing is happening now in New York City. A lot of people are moving out of New York City because of taxes and crime and whatever. But that allows people to move into New York City to live. And they're taking office buildings and they're converting them for residential use as well as for retail use. So that very well thing could happen here. And I think if somebody's creative, that would be an interesting thing to see in Jakarta as well.
Thank you, Pak Mike. Pak Ferry, would you like to add to the statement?
I don't think so, Auntie. I think what Mike says is already covers everything.
Okay, thank you, Pak Ferry and Pak Mike. Moving on to the next question about apartment. It comes from Pak Gary Tan. Pak Gary Tan asked from Roka Trading Indonesia, Pak Ferry, what do you think about new building apartment and hotels for the next 2 years? Will we start to see a new building, or will we be slow moving for new development, Pak Ferry?
Okay, first for apartment, I think what is in the pipeline is already scheduled as we have already, I think we have already outlined it in our report. Yeah, only that there might be some adjustment in the completion time. But anything which is already in plan, which is already under construction, I think will continue on. Only that for some project which is in the early stage of construction, they might be thinking about delay or maybe prolong the completion schedule, really depending on the on the market situation. As for hotel, the good thing about the hotel is that the supply pipeline will not be as scary as a few years ago, because right now it's not also very easy to for cities cities like Jakarta or Surabaya. It's not also very easy to build to ask for hotel permit development. And in fact, from the supply pipeline, we see that number of hotel projects coming in the future are in the regulated manner, meaning that we don't really worry about the supply projection in the future, because right now I think everybody can see that the overall performance of hotel industry is not that great. So that's also hold the appetite of developer to build new hotel, especially in Jakarta and Surabaya.
Thank you, Pak. To continue to that question, Pak Mike, Bapak Medwin, Pak Ferry, Bapak Medwin Fariskan from Colliers Indonesia also raised a question. Is there any possibility for low-rise apartment development to become one of the alternative during current situation, Pak Ferry?
Well, it really depends on the land regulation for each of the location. If the regulation or the plot ratio allows them to build maximum development, why should they build low-rise apartment? So perhaps if they can compensate with the price, if they want to, for example, if they want to create a luxury development in the middle of the city, for example, they can maybe compensate the allowable plot ratio that they get into higher prices. But that's, I think, not really the practice that the developer do. I think most probably they will utilize the maximum KLB or plot ratio they have. So this kind of low-rise apartment or residential, I think that's could be located in the residential areas, residential zone or residential area, like in the south area of Jakarta, or maybe or even in the greater Jakarta area, where they are aiming at the exclusivity of the area.
Thank you, Pak Ferry, for the answers. I will move to our next sector, which is retail market. We'll need Pak Ferry's help, or maybe and also Sander's help to answer. Sander, a question from Bapak Igor Putra. For retail market, in which city is shopping mall outperforming the rest? And are we seeing more tenants demanding a profit sharing scheme rather than fixed rate scheme upon the pandemic?
I think for cities, I don't know exactly what he means, but the cities where shopping malls are generally performing well, I would say, are Jakarta, obviously, but there's a big difference within the city between the malls that are performing well and the ones that are not as strong. And then Bandung and Surabaya, of course, are cities where shopping malls tend to perform very well. But I don't know if it's a comparison among cities or among shopping malls or among shopping malls and standalone retail. And what was the second question?
And the second question is, are we seeing more tenants demanding a profit sharing scheme rather than fixed rate scheme upon the pandemic?
Yeah. So that's also what I said during the presentation. That's definitely something we see happening in Indonesia. Also, not only in Indonesia, but also in the Southeast Asia, I would say, more and more retailers demanding for turnover rent or revenue sharing structures. However, a lot of landlords in Indonesia are not quite familiar with it yet. They don't seem to favor to give retailers a revenue sharing structure, but prefer to get a base rent and a normal base rent and service charge still. However, we think because of the current pandemic and because of the long time we have been in this pandemic right now, more and more retailers will probably request for revenue sharing structures. And so we expect over time that more and more landlords will accept it too. But right now it's in Indonesia not very common yet.
Okay, thank you. The next one is from Ibu Aurelia Setiabudi. Can she ask regarding the retail segment, what kind of permanent changes do you expect to see in the post-pandemic era for the landlord? And any timeline on when the landlord in Jakarta can start increasing rental rates again, Sander?
Any permanent changes in the retail market from the landlord? Was that the first question?
Yes, correct.
Okay.
Permanent changes because of the post-pandemic era for landlord.
Well, I mean, it's a bit like I said in the presentation, I would expect maybe a little more close cooperation between landlords and their tenants, and that could be in terms of revenue sharing structures. More and more landlords that might accept that, but it's also in terms of landlords trying to help the retailers with facilitate and making sure the infrastructure for online order fulfillment is in place at the different malls. Maybe creating more outdoor space, like I said, to make sure that shoppers that come to the mall feel more comfortable, they can hang out there instead of having to dine in. Of course, for existing assets, it's a bit more difficult. But I think those landlords should also have a look and see where they can create more outdoor space. And then for new assets, I think what we will see happening is that in the whole design, more outdoor space will be there.
Yeah, I can add to that. Basically, what is existing during the pandemic will continue on. Like they will continue to promote the health and safety environment. I think that's the healthy standard will remain there.
Yeah, definitely.
Okay.
Yeah.
Thank you. Next question about the retail market came from Pak Fajar Nurgifari Aziz. So, Sander, what incentives are given by the landlord for mall retailers during emergencies and level 4 PPKM at this time? And is there any different from what the landlord give in 2020?
I think it's a bit similar. It's a bit similar. I mean, but it depends. You know, it depends on the landlord. It also depends on the retailer. Of course, there are smaller retailers. There's anchor retailers in malls, and of course, anchors, they might have a little more leverage in terms of the amount of space they occupy or the brand that it is. But generally speaking, landlords, if the mall is closed, they tend to give either rent-free periods or rent rebates. And again, it depends on the type of retailer, I think, who's asking. There's some retailers that, like MAP, for example, they occupy a lot of space in most malls, around 30%, sometimes more. And so you can imagine they have a bit more leverage, I would say, over a landlord than an F&B retailer that occupies a single unit, right? So it differs per retailer. It differs also per landlord in terms of flexibility. But generally what we see now, it's a bit similar to what it was a year ago, yes.
Okay, thank you. Next question, still for retail, Sander. Quite a few questions for retail. It's from Kiki Aulia. Any exit clause in the agreement to support the retailers during the underperforming period in the same time to maintain the leases as well? although mostly it's negotiable or case-by-case basis, but going forward, is there anything for retailers could do in the beginning, either to expand or to extend the business?
I think that something exit clauses is something that is also apart from, like I said, the revenue sharing. There's also something, of course, that we see happening. You know, retailers asking for such clauses in case there is a PPKM or a lockdown, in case the pandemic seems to be over, but it's coming back again. So those clauses are being demanded by different retailers, yes. But it also, again, it depends on the landlord whether they would accept such thing, yes or no. So there's been discussion, for example, if a pandemic could be a part of a force majeure clause or not. You know, so that kind of discussion is ongoing, and of course, some retailers demand it, others don't, and some landlords are flexible and are okay to put those in, and others are not. So again, it depends.
Okay, last question from Bapak Arta Kurnia. Do you think revenue share method will make sense for retailers, both shopping mall occupiers and supporting retail in office building?
To me, it does make sense. It makes sense not only for the retailer, it also makes sense for the landlords. Although in Indonesia, like I said, it's not very common yet. From a retailer's perspective, of course, you divide the risk between yourself and your landlord in case of a pandemic like this. But also for the landlord, it's obviously positive because if the retailer is performing very well, they also get, of course, more income from that particular retailer. And I think what's also good about it is the fact that the landlord and the retailer should cooperate more closely than it's just, I would say, straight tenant in a certain mall. You know, so landlords, they're already doing that, but they might do it even more if they have a lot of revenue share structures in place. Is to make sure that the public continues to visit that particular mall, right? So it's in their favor if retailers make more revenue. So another positive thing is the closer cooperation, I would say, between landlords and retailers. But all these things like revenue sharing, pandemic clauses, break rights, and all that stuff, it's something we need to see how it evolves in the coming maybe 6 months. How landlords will respond to it, what exactly retailers will demand. But it's definitely, all these things is definitely something that will come.
Okay, last question. It turned out that before was not last question. It will be last question, Sander. So many for retail. So from Ying Mei Tan, do you see a retailer renting smaller space as they move to omni-channel, like you mentioned? That's the first one. And then the second one, how does revenue share translate to traditional rental rate?
Well, we see some retailers looking at smaller space, of course, but it depends if their concept allows them to occupy a smaller space. I think what we also see in terms of store design, we see changes like I mentioned in the presentation. So you see a lot of designated areas for Gojek drivers and Grab drivers to be able to pick up online orders, and so that they don't disturb the normal store operations and visitors. So we see all those things happening. Of course, the Omnibus Law allows international retailers, fashion retailers, to open smaller outlets. Instead of I think it was 2,500, they can go much smaller now, which is, of course, something they will look into. It doesn't mean they will necessarily do that for every outlet, but it's definitely something they will look into because it saves money in terms of rent, of course, but also fit-out costs. So if concepts allow them to, they will probably look into it, yes. And then the second one was, I'm sorry.
How does revenue share translate to traditional rental rate?
In terms of income, or landlords prefer right now in Indonesia, landlords prefer base rent, so they know exactly what they will, what income they will have from a certain tenant. Of course, during the pandemic, they had to be flexible, so they gave rent rebates. They were flexible in terms of service charges and all that. Turnover rent or revenue share, it's less certain, I would say. But in normal times, I think it can be very favorable for landlords because their income will probably be a bit higher compared to a normal base rent. But of course, when a pandemic like this happens, their income might be lower. And so there's different structures. There's a 100% revenue share. And there's also a structure where landlords say, okay, there's a minimum base rent that a retailer should pay, and the rest is revenue share. So there's different structures. In my view, it could be very positive for landlords in terms of their total income over time.
Okay, thank you, Sander. We'll move to industrial and logistics questions, Pak Rivan. The first one is from Michael Benes. The first question, do you think Indonesia could record high land sales like in 2011 and 2012 period, given the auto-related segment is unlikely to buy a huge land? And second is, how long does demand from data center, logistic, and warehouse will last? Pak Rivan.
Okay, I believe that the demand for land, which has happened like in 2011 and 12, is definitely possible to happen again. You know, but it will be a different game. The player will be different, because as you know, the automotive now is starting to change to the electric car. So that, I think, will develop a new colony for the industry. And if the pandemic is over and then the people can back to the normal activity, then there's a big potential for electric car and also for the vendor and also for the suppliers. But I think it will be in my prediction will be like in Subang area, or it's going to be a new area in which all the factories will be supply each other. You know, it's not going to be the same player as what we see in Cibitung and in Cikarang area. And then the second question about the data center. Okay, data center is just happened recently in the market. I mean, this is kind of new in the market and something that is happening in industrial. And as you know, data center, there are like three categories. You know, one is basically hyper scale, which is they're going to use by themselves. And then the second one is basically the co-location, which is they would like to find a space, and then after they secure the space, they will lease it to the end user. And then the third one is basically the investor. This is actually, like I mentioned in my presentation, the data center requirement is quite high, but the number of the transaction that really close in the market is not as much as the data center that are looking for sites. From sources that I heard, that is probably the market need to be tested. You know, somebody said that maybe in the next 2 years it will be oversupply for data center, but we are not sure yet about that. And as for what is the other one is for warehouse, yeah.
Yes.
Warehouse and e-commerce, I think will continue to increase, because there is still a lot of room to expand in Indonesia. So and this probably the area that's not so much impact because of the pandemic, but in fact it's actually increased, you know, because of the situation. I think that's my answer.
Thank you, Pak. The last question for industrial and logistics is from Bapak Rudi Halim. With the e-commerce becoming a way of life, is the demand for distribution and logistic main hubs at primary or secondary cities have been satisfied, who are still actively looking to secure location or facility, and what are they looking for in terms of the major requirements?
Yeah, as I mentioned, I mean, right now, mostly the major city, Jakarta, Surabaya, you know, that's the main one that the demand for warehouse hub and distribution, while other cities, for example, like Medan and other Ujung Pandang, will be also, you know, following. But of course, Jakarta is more advanced because that's logistic is really depends on the infrastructure, which is Jabodetabek is the best among others. You know, so I think this will be continue, and who are still actively looking is basically all the e-commerce. They're still been looking for the, either they have a strategy of having several small hub, or they want to have a main distribution hub. But I see a lot of, it's always growing, you know, in the e-commerce. And what else? What are they looking for in terms of the major requirements?
Yeah.
Yeah, could be like a small, like I mentioned, could be a small one, could be a big hub, big distribution center. So it really depends on the client needs, yeah. But it's a growing market. Thank you, Andy.
Okay. Thank you, Pak Rivan, for answering the question. I think that sums up our question and answer session for today. Thank you for all the questions. We still have quite a few questions that are still unanswered, but don't worry, we will have our experts reply to all these unanswered questions via email. We're already 9 minutes past our time today, so I will conclude the webinar session. Do not forget to scan our QR codes. This is our experts QR codes. If you need further discussion with them, just scan through and maybe email or WhatsApp them. And scan our QR code to access our reports. You will need to subscribe, and we will make sure that everyone receives the quarterly reports or market insights every time we publish one. Thank you to all of our panelists for today's session, and to all of our attendees to attend our webinar session today. Don't worry, we will send out the recorded version to your email inbox tomorrow, along with the presentation slides. And we will ask for your help to fill out the webinar survey so that we can improve our webinar in the future. Thank you for joining today's webinar. Until then, stay safe and healthy, everyone. Bye-bye.